Welcome back to Bazaar. Well, as promised, Endurance Technology is the stock that we're looking at. The company reported a strong set of Q3 earnings. Their revenue and EBITDA saw healthy gains, but the margins actually came down 100 basis points sequentially. Ramesh Gehaney, the Executive Director and CEO of Endurance Technology, joins us now. Ramesh, thanks a lot for joining in. I want to first start by talking about the top line growth, right? If you look at what's been happening in 9 months, the revenue growth has been about 15%. But you've had some struggles in the European market, which is now seeing a bit of a recovery. Tell us, how is the situation on the ground and what do you think you can end the year with? What is the likely growth that you're expecting to see in FY25?
Good morning, Sonia. Well, it's really promising to see that Europe is doing better. And after a very long time, we've seen a good December also, a good Q3. So let's hope things turn out better. 13.3% increase on the new car registrations is a handsome number. If they continue with this, I think we'll have a very good year. And if we continue like this, I think a promising year awaits us by the end.
Give us a number. I mean, you say promising year, right? I mean, this quarter, you've seen a 22% growth on the top line. Is this something that you can replicate in Q4? And what about FY25?
See, you must appreciate one thing, that the auto industry is dependent on the OEM performance. So are we. I would look at it from a different way. How much are we performing better than the industry? And if you look, 5.3% or 5.8% has been the overall growth of the industry, and we've been up by 15% more. So our stand since the beginning has been that we'll perform better than the industry, and that is something that we always target upon, and we'll keep on maintaining that.
Okay, all right. Hi, Mr. Gehaney. Good morning and good to see you in. I want to focus on the electric vehicle segment. Out there, your order value has risen. I think it moved from around 90 crores to around 380 crores in FY23 itself. Could you tell us what is the trajectory from here on? And as a percentage of business, how much can it contribute, say in FY25, FY26 onwards? Mr. Gehaney?
Let's look at it differently. Yeah. We have acquired around 600 crores. Hello? Am I audible?
Yes, sir. Yes, you are. Please go ahead.
Yeah, we have acquired approximately 600 crores. We've acquired 600 crores of business, of EV business. And we are expanding our way, not only casting, braking, and suspension, but we're also looking at BMS taking the next leap on the electric side. So there also the numbers are increasing. Our order wins on EVs has been good, and as I said earlier, that we were a late entrant in this, but now we are catching up very fast. And suspension and braking is showing very good results as far as the new business wins are concerned.
So EVs as a percentage of your overall business is now about 42%, right? At the end of FY23, that is. Where do we stand at as of now? And over the next 2 to 3 years, how much do you think you can take the EV pie to?
See, it depends on how the EV space, moves up. The OEMs have got to perform. There are more and more new players coming in. Some people are struggling with the, FAME subsidies and so on. But once that then you can see, the numbers coming up faster than what we see today.
In Q3, right, you won new orders worth 160 crores in India and 9 million euros in the EU market. I want to understand, what is the order visibility that you have over the next 12 to 18 months, over and above these orders?
No, let me put it a bit differently. We have won approximately 250 million euros of business as far as EVs, out of which 209 million euro is EV alone. So we are at a very handsome space as far as the performance is concerned. And likewise, in India, 600 crores doesn't match up too much with the kind of growth that we have seen in ICE, because the high-end bikes have found a good space, a good audience on high-end bikes. So there's been a bit of slowdown as far as the EV performance is concerned, but I think some of the OEMs are doing extremely well, and the numbers are catching up very fast, on which we are largely present. We've got a very good share of business on them. So I think it will be a mix of two things. One is how much of business do we acquire, and at what speed the OEMs progress on the EV space.
Just one final question from my end on the Maxwell business. That has been improving as well. I mean, your revenue has more than doubled year on year on a low base. By when do you think you could turn into profitability for the Maxwell business?
That's a good question. See, we have already said that we'll be EBITDA positive by Q1 of next year. So from there, as the numbers move on, see, we have been supplying BMSs in very strong numbers, and we've got a very strong position in the market because more than 150,000 BMSs have been applied onto the Indian road conditions, which means that our understanding of the Indian road conditions is very strong. And we are we've got the capability to look into the any fresh requirements that come in or any change in configurations which come in, we can adopt that very fast. So I think our progress at Max will also be very good.
All right, we'll leave it there, sir. Thank you very much for joining in, and great conversation as always. Good luck as you look ahead.